what's notable is that there is some desire to be making purchases at this moment, despite the volatility in the market. What do you make of M&A coming to the fore?
Well, there's definitely the race is on. I think that's a good description of the current state of the market. There are a lot of disruptive changes happening across different themes. AI is one of them, but there are other things as well. And because of that, I feel that incumbents, in particular, with such strong balance sheet historically, they are looking to bolster their war chest, because when disruptive changes happen at this pace, everybody is spending, and you can think of spending as in CapEx, but M&A is another factor that it plays in, and then sometimes can help you get a lead. But I would say the bottom line is the race is on. Everybody's playing both offensive and defensive, and that's what makes it an interesting and exciting market to invest.
How have you seen the disruption and the race in space, in defense tech? Has that been something you've been leaning into with the funds?
Yes, and for our portfolio, we have been looking at disruptive changes across, and space and defense tech is certainly one area that we're seeing tremendous amount of capital flowing into it. And so while the market has been spending a lot of time, and AI is certainly part of it, where a lot of capital has flowed into it, space and defense tech, it is an area, particularly in developed markets, we have actually underinvested in and perhaps underestimated. So when we look for secular changes longer term, these are two buckets that we see sustainable growth trends.
Lei, bear with us for 1 second. We have some breaking news on the Bloomberg terminal. Disney is announcing it's cutting 1,000 jobs, the first wave of layoffs under new CEO Josh D'Amaro. The layoffs are company-wide, but they will fall particularly hard in marketing and the marketing department, which is being consolidated under new leadership. An interesting one, Disney shares up around a percentage point right now in response to this, but 1,000 jobs in the context of this company, Caroline, is a relatively big move. But it's a company of 230,000 people. So we're going to continue tracking that and bring you a fuller picture later in the program. What you were just saying, Lei, is so interesting. When you've come on this program, we've been talking in the context of the AI race on terrestrial-based assets. For many people, the next wave, particularly running inference at the edge, is going to be above our heads. And so in the context of what we went through, Amazon, Globalstar, satellite communications generally, what is the AllianceBernstein thesis on that?
I think from our perspective, when we think about it, a lot of attention has been clearly focused on the GPUs at the core and then on the training side. And this year, with the rapid adoption of AI, as we have seen the token adoption, we see increasing evidence the edge is taking off, and the data center infrastructure, as we see it, it's rapidly evolving. So if you look at from an investment perspective from our fund, we're seeing a broadening out. We're seeing the players, the incumbents and new entrants, thinking about what the future of infrastructure would look like. We talked about the shortages at various levels. We talked about the training, the power.
Right.
But increasingly, we're also seeing, just even at a commodity level, across the board, we're seeing the adoption. And that gives us confidence that there is increasing confidence in the CapEx spend, the sustainable trend of that. And then beyond that, in terms of different buckets that will benefit from it, we're really seeing the broadening out of different ways that we're trying, because at the end of the day, AI is incredibly capital intensive, data intensive, bandwidth intensive. So everything has to catch up. There are just a lot of investment opportunities across the board.
Have you done an assessment on the viability of the economics of orbital data center?
I think it's probably too early to say that, to say definitively viable or not viable. But that said, we're just using today's revenue numbers. But this is really about the rebuild of the future of infrastructure as we see it in a digital world. So I would venture to say some of the changes that we have seen thus far in terms of how rapidly we have hit an inflection point in AI adoption. Just look at the ARRs of some of the new entrants. It's staggering how fast it's actually ramping. So if we take that as a starting point and then we look out, I would say, if historically in technology and when there's disruptive trends, what we have seen is on the short-term basis, it looks like everything could be overbuilt. But if you actually look out on a long-term basis, as consumption is taking off, we actually don't have enough capacity to address all the needs of the future. And in this particular case, it's really about looking out long-term and having a secular view and then say, what do we see as the future, and then invest accordingly. They're not all going to be winners. There will be some losers. And so we actually have to be very selective as well.
Nimble, and therefore how much do you divert towards the energy focus, towards the actual infrastructure, rather than just the deployment and the applications?
Yes, we actually just look across the board at all times, right? All investments, when we look at it, we think about, I always say, we don't look at valuation as the first starting point, but ultimately we do look at the long-term potential and look at how much the stocks have been bid up, and then how sustainable it is, the growth and the margin profit pools that we're looking at, and whether that justify the valuation. So that at all times it does require you to be more nimble as an active investor in this kind of environment.